Thank you for the opportunity to present the ALG Shifundi project to you. Kobus started his career in corporate finance banking and then became a stockbroker for 20 years. He completed his MBA at the University of Wales. He decided to follow his passion for mining by identifying prospect areas in Mozambique, proving mineralization and de-risking projects in order to sell them on. He has over 15 years of experience in Mozambique. He has personally evaluated 1,800 concessions and has developed and sold numerous projects, including a tantalite project to Afrique, a coal project to AfriMinerals, a diamond project to Mustang, graphite projects sold to Belama and Uvana, and he also developed and mined rubies, which he then sold to Gemrock and Fura. It took him 10 years evaluating over 200 of the top gold concessions across Mozambique before he discovered the Shifundi project. Franco commenced his working career in mining and became an expert in financial accounting, management reporting, systems, corporate governance, treasury, marketing, and projects. He completed his BCom Honours degree, CIMA Advanced Diploma, PMP, and CCP. He worked for some of the major players in the mining industry, including Impala Platinum, Eastplat, Trafigura, and Vedanta. He has worked in South Africa, Mozambique, Angola, DRC, and Namibia. He has experience in platinum group metals, iron, chrome, copper, zinc, lead, and silver. Dirk holds a master's degree in geology and more than 35 years' experience in the field. He worked for Anglo Gold in South Africa as exploration manager, in Ghana as country manager, and later in Australia. Robert is a registered professional geologist with more than 30 years of experience. He is an active member of SME and served on the board for more than 10 years. He was also a previous president of SME and PDAC. Philip graduated from Oxford University and is the well-known founder of RAP Capital in the UK. Kyle Lusted is the head of the geological department. Paulo Sintra is the mining engineer, and Bentu Mashlanga is the senior geologist. All directors get paid in shares until the listing. We aim to do a £3 million placement at 14 pence per share at a valuation of £9.7 million. Post-placement, the outstanding shares issued will be 90.6 million with a valuation of £12.6 million. The £711,000 loan is an interest-free soft loan from the original project developer to be repaid post-IPO. We have a clean capital structure with no options or warrants outstanding. Our goal for the short term is to get to production, and we've already engaged a contract miner. This will provide cash flow to fund exploration after the IPO. We will fast-track formal open-pit mining within 3 years, using the cash flow from the contract miner to complete a feasibility study and finance the plant. Our aim within 5 to 7 years is to define a multi-million ounce deposit and increase production. This strategy differentiates us from most other exploration companies. Mozambique is one of the best investment destinations in Africa, with multi-billion-dollar investments in resources and oil and gas. The reason why we love Mozambique is because it's one of the most underexplored countries in the world, and in the past 5 years, major discoveries include the largest graphite deposit, the largest ruby deposit, and the second largest gas deposit in the world. Other significant resource discoveries include gold, coal, iron ore, heavy mineral sands, tantalite, titanium, copper, and many more. Mozambique's infrastructure supports its growth, with 7 ports, multiple international airports, 30,000 kilometers of roads, and 4,700 kilometers of railways. The country is politically stable, with a multi-party democracy and has a resilient GDP growth. The big fiscal stimulus spending has fueled inflation, and gold is a perfect hedge for inflation, which should support the gold price on its current levels and might even drive it to new heights. What is interesting is in years when inflation was higher than 3%, the gold price increased on average 15% per year. The Chifundi project is situated in Mozambique's Tete province, on the border of Zambia and Malawi. It is 60 kilometers from Lilongwe, the capital of Malawi, and 220 kilometers from Tete, the capital of Tete province in Mozambique. ALG owns 80% of the project, and 20% is owned by a Mozambican businessman. The exploration license was successfully converted to a mining concession in September last year, and is valid for 25 years and can be extended for another 25 years. The mining concession makes the fast-track mining strategy possible. We have completed geophysics, soil sampling, project infrastructure, and 7,200 meters of drilling to date, and defined an exploration target of between 220,000 and 1.3 million ounces. The drilling intersected high-grade zones of between 5 to 38 grams per ton of gold. This slide shows Gondwana land, after West Gondwana and East Gondwana collided. The Chifundi Gold Project is located within the Pan-African Collision Zone, which is an extension of the gold-rich Arabian Shield. This is an aerial view of the camp infrastructure. As you can see, we haven't gone overboard, but have a very functional layout with a secure core shed. During exploration phase 1, we completed the aeromagnetic and radiometric surveys, structural interpretation across the concession, and reconnaissance drilling. From phase 1, we defined the geological controls, confirmed high-grade mineralization, and prioritized prospects for follow-up drilling. This is a thermal aureole gold model, indicating the position of some of the biggest deposits in relation to the granite contact zone. The Chifundi project sits in a similar position within the tag model. The red is the granites that intruded the country rock. In our concession area, the country rock is amphibolite. The yellow is the alteration zones, and the black stripes are the shear and fault zones, which is the pathways for the penetrating fluids. This is our predictive model for gold mineralization. Here we can see some of the geophysics and satellite images created from different datasets. The aeromagnetics are used to delineate structures. The radiometrics indicate different rock types and the contacts between them, and the asters show the different alteration types. By combining the geophysics and satellite imagery, we identified structures and the contact zones between granites and amphibolites. Based on the tag model and confirmed mineralization in rock exposures, we decided to focus on the Muzanjiretsi, Chitsunda, and Copper Hill prospects. We correlated the drill information with the geophysics on the current prospect areas and identified 17 additional prospect areas with similar lithologies and structures across the rest of the concession. This is done using the predictive tag model and our own field information. The channel sampling at Muzanjiretsi returned grades of up to 124 gram per ton, confirming the mineralized structures to target during the Phase 2 drilling program. These high-grade mining phases from artisanals can immediately be mined. During Phase 2, we successfully converted the exploration license to a mining concession across the entire exploration license area, and this differentiates us from all other exploration companies. Normally, you would complete a feasibility study before applying for the mining concession, which usually takes 3 to 7 years after completion of the study. We have the mining concession in hand and can start mining immediately. We drilled 6,300 meters on the 3 prospect areas and submitted 9,700 samples to the lab. We intersected high-grade zones ranging from 5 grams per ton to 38 grams per ton. An exploration target of 1.3 million ounces was defined on only the 3 prospect areas. 17 additional prospect areas were identified with huge blue sky potential. This cross-section of Mzinyaredzi shows the thrust cutting through the shear zones and also shows 2 new ore bodies, with 1 ore body starting at surface. The bottom right shows that we drilled an area of 340 meters by 190 meters. The strike and depth extensions will be tested during future drilling phases. Based on the drilling shown by the blue lines, we created the Chitsunda 3D model to better understand the structures and mineralized zones. This model was used to plan the Phase 3 drilling. The bottom right shows that we correlated a strike length of the thrust across 330 meters, with a potential mineralized strike length of 850 meters between drill holes along the contact zone, as can be seen from the radiometrics. If we look at the table, the third column indicates the lower grade halo, and the last column indicates the high grade intersections. Hole 7 shows mineralization from surface, with 2.35 grams per ton over 15 meters, and the high grade zone of 8.35 grams per ton over 4 meters. These extensive volumes support the economic viability of initial open pit mining. Ultimately, the discrete high-grade zones may support underground mining. These are simplified cross-sections of drill holes in Chitsunda and Mzinyaredzi. The black lines are the boreholes, with the gold bars indicating the low-grade volumes surrounding the high-grade zones. For instance, hole 15 at Chitsunda has high grades of up to 23 grams per ton, surrounded by a lower grade halo of 80 meters. This halo effect increases the potential ore volumes dramatically and reduces the dilution in open pit mining. The blue sky potential of both Chitsunda and Mzinyaredzi are open-ended along strike and depth. We conducted a 50-meter spaced sampling grid covering 44 hectares over the Copper Hill prospect, with bulk leach testing done. The anomalies indicate the possible ore body size of 400 by 600 meters and will be tested during the next phase of exploration. The same type of grid will be done on the other 17 prospect areas, which will indicate the size of the potential ore bodies. During Phase 3, we aim to do 6,100 meters of infill and extensional drilling and complete a maiden mineral resource. We have planned auger drilling, trenching and channel sampling for the Copper Hill prospect, along with soil sampling on the other identified prospect areas. The picture indicates drill hole locations for the Phase 3 infill and extensional drilling program. We will have our first feasibility study completed by 2024 for the first open pit. The £3 million will be used to finance the Phase 3 exploration program. 78% of the total budget is allocated towards exploration, with 3.5% for corporate and admin, 12% towards listing fees, and the remaining 6.5% for corporate finance fees. With the proven mineralization from surface, the board decided to engage a mining contractor to do small-scale mining. The contractor is limited to mine up to 25 meters, not to compromise future open pit design after the resource is proven. They will fund the entire capital expenditure related to the small-scale mining, with no capital or risk for ALG. The gold will be split 74% to the contractor, 20% to Uramulamuli, ALG's Mozambican subsidiary, and 6% towards production tax. We estimate production of 12,000 ounces per annum, with the potential step up to 24,000 ounces per annum, and potential cash inflow of $4.3 million initially, with a step up to $8.6 million. This may fund future drilling, with no need to raise further capital after the IPO. This slide indicates the estimated timeline for this year, with black stars showing potential uplift in market value. The private raise to be completed in Q1. Infill and resource drilling, along with the upgrade of additional targets, to be completed in Q2. Maiden resource statement completed in Q3. Production from small-scale mining and IPO and listing in the second half of the year. We have also already appointed PKF as the auditors and Beaumont Cornish as Nomad, with first gold sales projected for Q4. We screened ALG's peers and looked at only gold exploration companies listed within the last 5 years, operating in Africa and Latin America with comparable exploration targets. The comparison with ALG's peers indicates that ALG is undervalued, with good upside potential when taking into consideration early annual cash flow of $4.3 million and with further potential of a multi-million ounce deposit. The real question is, why invest now? The main advantages being a low valuation with considerable upside potential. The mining concession is in hand. We will have the maiden resource in the second half of this year. We aim to produce a multi-million ounce resource, having defined an exploration target of 1.3 million ounces on only 3 of the 20 prospect areas, and with substantial blue sky potential on the additional 17 areas. Early annual cash flow of $4.3 million to $8.6 million will make us self-funded for future drilling. We will have our first feasibility study completed by 2024 for the first open pit. Thank you for your time. For more information, please contact Kobus or Franco.